Hello and welcome to the another topic, the balance sheet. Balance sheet is the one of the important financial statement. We already covered the income statement and the cash flow statement in the earlier video. If you haven't checked it out, you can check it out as well on this playlist. So balance sheet is shows is at the point of time. So let me have so now we have a blank screen, so which help us to understand the balance sheet. So basically, just in comparison with the income statement or cash flow statement, which is for the duration of time, for the annually, from January to December, or whatever the period any company or corporation prefer. The balance sheet is just a point of time that, let's say, year end, or mostly the we do the yearly or interim basis as well. So this is a single point in time, like I say, one day. What's our assets and liability, what's the equity. So it's not like as a period of time. So that's a clear distinction between, in everything whatever we take from income statement or cash flow, it can comes to the balance sheet. But in this video, those are just the components. So component wise, it should be very simple. The main thing is how we compose the balance sheet. So if I take very simply, so we have all the assets of a company should be equal to whatever the liability it has, plus any equity, right? So this is the fundamental principle. If you do any accounting entry, and also you have to be known this in mind, that if I am increasing something, so we need to increase or it liability or equity in order to increase the asset. But if I am decreasing something, it has to be uh, with one of these entries as well. So need to be careful. It has to be balanced. For example, if we have so much liable, if we have less liability, then only we can have some equity. So this is like an asset, right? And just to this is liability, and this is the equity. So here what we are saying, if asset, if we only have equity value, if the liability is little bit lower, right? If the more we have a lower or less liability, this mean, if this remain the same, then this mean this will automatically increases. And if this is increasing, this mean the shareholder wealth, or the shareholder wealth, or the whoever, or the investors wealth is increasing, right? So for sure, from the company perspective, they can control the assets, right? They own the assets, because using these assets, they can produce more and more whatever the product they have, right? So for that, maybe they raise the liability in order to bring more assets, or they can issue some shares to bring the more so whatever, not the, yeah, not here but here. So whatever the share or the bonds they can issue to to get it, but they have to make it enough, so they pay this one. But after paying even this one, so this should left. It should not be like the case where we have, let's say, this is $100. uh, and let's pick a simple example before we go to extreme. Let's say, when if we have $100 of the assets, and the liability, let's say, to bring is let's say 40. This means we have a pretty 60 is our the equity. So we have some shareholders or owners equities there, which represent some of their wealth. But what will happen if this is still 100? Let's say in one case, the bad case, I'll say that, right? We have A is 100, but our liability is all owned by the liability, right? So is all 100. This means we don't have it any shareholder equity. Oops, what happened here? think I lost something. Okay, let's go to swap. Okay, luckily I didn't miss. I think I don't know. So let me bring my pen back. Sorry about that. So that's the very base or minimum structure. But if we see from the tabular view perspective, so basically here we have all the assets. We can write this as well. Then we have the liabilities written here, right? And then the next thing, it's pretty straightforward. Then because it if it has to be balanced, then this means this has to be equities. So and we know the asset can be divided into two part. One is the current assets. I'm not going to detail, but I can add what's the current assets, or it can be non-current asset, right? Non-current. So current assets can be okay, I'll fill this later on. And then we have this liabilities, which can also further distinguish as a current. Oh, I put the okay current liabilities or non-current liability means this is a longer term. Whenever we say current, it means the short terms, and whatever is remaining, it's it's the equity basically. We also have like a residual income here, or retained earning, which comes from the this is retained earning, which comes from the income statement, right? And then this is the shareholder equity, actually shareholder equity here. If you want me, okay, so what is the current assets, right? The current asset can be cash, it can be cash, account receivable, right? Inventories. Inventories we also treat as a current assets, right? And this is like properties, plant and equipment. Then it can be some uh, goodwill. Goodwill will also come here. Then any investment activities, you can put it here as well. So let's go on the quickly. I'll put one or two example, but it can you can easily Google or find in your course books. So this can be account payable, similar to account receivables, some deferred tax liability, right? Deferred tax liability for the short terms, or for the and actually deferred tax liability, I think is a short time. I'm not honestly, I don't remember top of my head on this one, but this can be a, like a long term bond. If company has, right, it can come here. And then we have this retain earning and this one. So pretty much if you want me, so we can whatever the example we put it here. Now this is more granular, like we can say like, okay, this is $10, this is also $10, this is, let's say, let's make it $100, right, to make it simple. So let's put this as $60. Oops. 60, 60, 70, 80. Let's say $20 is goodwill. So you see, this is pretty straightforward. And if let's make this as a 40, so let's say 20 is the, let's say 10 is the current liability, and the long term liability of the bond is 30. And our retained earnings, let's say it comes up with 10 as well. So 30, 40, 50, and 30, 40, 50, and this is 50 as well. So this come as 100. So you see here, right, this is just a different structure, but the idea is pretty straightforward. At the end, it all come to this. It all come to it all come to this. So this is the key. Oops, so this is the key. So I'll put a flag here. So if this should be the must, whenever you think any accounting entry, just to reiterate the point, you should focus on that. So let's take some good real example from any company's annual balance sheet. So I already picked up the Apple. So because Apple, everybody likes Apple, I believe. Talk about Apple, let's see this balance sheet and see. So this is the latest as of today, this is 18 September. But this balance sheet is from 2017 30th 2017, right? This is their annual balance sheet. In it's all the figures are in million, right? So in the US dollars. So if you see, this is pretty straightforward. So all the current assets, so you see the entry cash, short-term assets, account receivables. So they list all these. So good thing about to note here is, okay, look at their inventory, right? Is only, it's not too much. It's four around billion, right? 4.85 billion, I believe. And look at this, everything is very liquid here. So it's quite good, right? If cash, look at the cash, how much cash or short-term investment they have, 53 and 12. So pretty good company. And on the asset side, they have the depreciation of, wow, it's a huge depreciation they put. So need to see here. But because the assets is equipment is 75, and strangely 41 is almost, actually over the half they put it as the depreciations. And so the net, so this mean, if you think from this way, maybe they need to put soon more machinery in place to make those Apple iPhone or those whatever they are doing. Okay, so the goodwill is pretty good goodwill. Long term investment they did is, wow, is a huge 194,714 million. And other long term asset they have 10. But I'm a little bit worried here. So this kind of thing you can quickly see, right? It's just a common sense as well. So it's not only we are just listing, okay, these are, let's say, the account payable. So they still need to pay 149 14,9049 million, and accrued expenses and all. The long term debt is quite high, actually. I find 97,207 for them, and this is the total debt. But and how much in retain earning they have? Okay, retain earning is 98. So yearly this has come as a accumulate deficit. So 98 is not that bad, but they're inc- so we need to see, because this is a single year, so we cannot comment much on the per year basis. But if we see on the relative side, we can see. But I'll cover that on the next video. But just to be give some highlight here, overall I think the concept here is, okay, this is the current assets and this is the long non-current assets. Then we have current liabilities and the liabilities, and then total liability is 241. But the overall the balance sheet or the total asset is, if you notice it, 375,319. And if I come here, the total asset 375,319. So overall, the good thing about what we can see here is, not only just list the A minus B, but A equal to L, A equal to L plus E, which is asset equal to liability plus equity. But we can quickly see that, okay, they have a huge cash pile of cash sitting. That's one advantage. But it makes me a concern here then, that this why most of their machineries are actually blowing up, right? Because it's almost half. And the second thing is, I believe maybe their long term debt, why is so high, right? So I wish if there's a little bit lower here. But we can see, so now if we want to compare this, we can see on the history whether it's growing or reducing the long term debt. And also we can try to compare with the other companies as well, with the similar industry. So that another way we can find out. So but I will do, or you can do your own, or if I get a time, I'll see to cover that on another video. But pretty much that's it for the balance sheet. So hopefully you like the video. So if you want me to do any other video, please put on the comments. Otherwise, I do appreciate if you subscribe to my channel and like the video. Thank you very much. Bye.